Welcome to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuquay is here to share market facts, the fundamentals of selling, buying, owning, and improving your home, plus interesting experts. Now, here is Paul.
Well, I'm welcoming you back to the Real Estate PB&J Hour. I'm Paul Fuquay, as was so eloquently described by our producer, Dino, in the lead into the show. I am a realtor. I've been a realtor for a quarter of a century in this area, and I've helped hundreds and hundreds and hundreds of people buy, sell, find, and dispose of real estate properties. And it's been fun, and it's been a good ride, and I enjoy every minute of it. And I've been lucky enough to enjoy that. Today I'm joined by co-hosts, two people with whom I have worked and do work and have enjoyed immensely. You've already met Kim Pimento, who is a broker at Rose and Womble, and my good friend and always entertaining fellow realtor Bob Freck, who was on the show a couple weeks ago. And we had such a good time that I decided to ask him and Kim to join in on this show today, because we're going to be talking about the contract and all the elements, or many of the elements, of a contract that a buyer will submit to purchase a piece of property, what the pitfalls are to avoid, and what the strengths are, and how to structure a deal in writing so that it will be efficient for you and hopefully gain the victory of being able to purchase the property.
So what you're saying, Paul, is that we're not going to talk about 25 years ago when we first met and your hair was all black back then?
Yeah, I had a lot of it.
Yeah, you had a lot more up top. And yeah,
well, look, you folks, this is not a vlog. This is a radio show, so I have a great face for radio, and that's an old saw. But my friend Freck loves to make fun of me because his hair is the color of notebook paper.
That's exactly right. I'd like to call it weathered wood.
Yeah. All right. I mean, this is the approach we're going to take tonight. We're not structured the way we normally are. One thing that Kim will do is give us a brief rundown on the rate structure, because that's in the news. We certainly have seen an explosion in the interest rates, and that's, of course, the big bugaboo in real estate today. That I'm asked every time I'm with people, what are the rates? What's happening? And my answer is, if you want to buy the house, you can afford to buy the house, because the rates will change, number one. Number two, you can always refi. Number three, what's a few dollars more per month on the short term when you can look out 2 to 3 years and refi while you're building equity? Lenders want to lend you money because that's how they make their livings. Now, if you want to call in and ask live questions, 497-1310, 757-497-1310. We're at Chevy Talk, there, man. Money Talk 1310 AM, 100.9 FM, and you're at moneytalk1310.com. So let's talk a little bit about rates. Kim.
All right. Thank you, Paul. All right. Well, this is according to Holly Robinson with the Advanced Financial Group. I spoke to her just before I left to come over here today. And the rates that I'm going to quote you today are based on a 780 credit score, which means that the perfect credit score would be around 850. Very seldom does she see those. So we're looking at a person who has a relatively high credit score with 10 months in reserves. That means you'd have 10 months of money's saved away to make your payments for 10 months.
So,
all right.
So Kim, you're saying if the payments are $2,000 a month, then they're going to have $20,000 saved away. It's not going to go towards the purchase of the house.
Correct.
When everything's said and done, they've still got $20,000 left over.
Correct. They have the money to close, the money for any required down payment, and then the $20,000 sitting in reserves.
Okay. With the 780 credit score.
With the 780 credit score. So, and it takes about at least I've seen some lenders out there today I've heard veterans, American veterans will do a 580. Most of them are about 620 is about the lowest score to get a loan with someone like Advanced Financial or Town Bank or, Wells Fargo, some of the larger banks.
So let me ask you a question. when your credit score goes down below that 750 or whatever, do you still get the same interest rate as that 751? What happens to your interest rate when your credit score is lower?
Your interest rates go up, and probably also some of the fees that the lender charges you will go up.
So in other words, keep your credit clean and work hard on good credit.
Yes, very, very much so. And if you have bad credit, it's worth pulling that credit score. Please do not use Karma, the Credit Karma out there. Usually that's wrong by maybe sometimes up to 25 to 50 points for some people. Make sure it's from one of our reputable credit, is what it's Experian, Transatlantic, and what's the other one? I want to say Expedia, Equifax. I want to say Expedia, but that's travel. So
and getting with somebody like Holly that can help these buyers sit down and look at their credit, and she can help coach them on how to improve their credit and where their priorities need to be to raise their credit score, which lowers their interest rate, lowers their fees at the closing table, and can get them in their home.
Right. And one of the main things that people always think, well, I'm just going to close out my accounts and pay them off. And actually, that's not the right thing to do. Because if you have some accounts open and you have zero balance, or maybe you only use $50 and pay it off at the end of the month, that actually helps your credit score better than just closing out all those accounts, because it shows that you have the ability to use those cards, but you're not doing it.
Correct.
So you're good at managing your money and paying your bills on time. I mean, that's one of the main things. Pay your bills on time.
Yes, and including if you're renting.
Yes.
And being able to show a history of making your rent payments on time. Lenders look at that stuff. Really important.
Yeah, and some people don't have any credit. I've ran across a lot of people, especially when I was doing property management. They just don't have any credit. They don't have a credit card. But so you can then use bills if you've been with Dominion or you've been with the UBS, I can't, Rubs or whatever it is here in the area. If you've been with them, and then if you've been paying your rent and you're with somebody like Rose and Womble, who has a credible property management company, can show that, yes, he's paid his rent for the last 3 months.
Correct.
Or 3 years probably, or a year or more on time. So that's real important to build credit. You know, if you don't have it, you need to start getting it.
Correct.
You
and
can
there's
limit.
alternative ways to do that versus going out and buying something expensive and making payments and putting a lot of money into interest that you could be saving for your house.
Correct. You can limit it. You can do $100. I mean, you know, maybe it's your favorite Best Buy, or if you're into clothes, it's Macy's. You know, but you can make it very limited amount so you don't, you know, have the tendency to go over. And just don't take their calls when they call you and ask you, do you want to increase your credit limit? Your answer is no.
That's right. We have a great deal for you on a new credit card.
Those are the same people that call me and because they found out that my warranty has run out. Right?
That's
exactly the same.
That's exactly
people.
right. We've got a deal for you.
Yes. Well, what else we should be talking about here?
Okay, so we'll get down to the rates now. I don't think I mentioned those. Okay, so today a VA is at 5.125. Paying 1 point. And remember, 1 point is 1% of the loan amount. So if you have a $400,000 loan, you would be paying $4,000 up front or at closing to get that 5.125%. So with the FHA, it's the same thing. It's 1 point at 5.125%. So to give you a ballpark figure, just your principal and interest on a VA with zero in, your payment would be between $21.50 and $22. So that's quite a bit that's a $400,000 house. With the FHA and $3,000 down, your payment would probably be between about $2,100 and $2,200, somewhere around there.
That's 3.5% down, not
Yep.
3,000. 3.5%.
Yeah, 3.5%.
So that was on a $400,000 loan. That'd be $12,000 plus.
Right.
Correct. On a down payment.
Yeah, on the down payment. Remember,
Correct.
VA zero down, conforming. They want 20%, and how you work that out, they'll take 5 or 10 on a conforming standard loan, and then on FHA, it's a minimum 3.5% down. But
so it's interesting. So not only on some of these loans you have to have this reserve after everything's said and done, but you've got to have the money to get into the front door in the form of a down payment.
Mm-hmm.
Yes.
Okay, which is going to be 3.5% or more of the purchase price. And then you have to have the money, in most cases in the market we're in now, to cover your closing costs, which is another 3 to 3.5%. Right. So, it's...
Well, let's talk about a conforming loan. What conforming is a regular loan. It's capped at $640,000, right?
$647.
And the rate on it right now is 6%.
1%.
With 1 point. Which is actually better than it was a week ago, if I'm not mistaken. We had some quotes, or maybe 2 weeks ago.
Yeah, I think this one may have gotten a little bit worse, but these have gotten better.
You got to talk into the
mic.
Yeah,
the conforming's gotten a little bit worse, but the FHA and VA have improved just since yesterday.
Well, it's the National Association of Realtors, we quote quite a bit. One of the things they said in their recent report was that the jump in the mortgage interest rates and the slight increase in the number of houses on the market have combined, at least it seems in this area, to stimulate the trend to reduce list prices in order to attract more buyers to properties and to change other elements of the buying patterns.
Well, and we're seeing that. In particular, I look at the Outer Banks a lot of North Carolina.
Right.
And a year ago to 2 years ago, you were just seeing crazy list prices on houses down there.
Right.
Now, when you get updates on the active properties, you're seeing price reduction after price reduction, and we're talking some pretty $100,000.
Yeah, but you're talking about seven-figure houses in most instances.
Well, I was just looking at one that was it was probably $700, but they $100,000 price reduction to get them back down into conforming. Reality, into conforming, and open the market back up to potential buyers who are paying higher interest rates.
Right.
That's making it difficult to move these houses, some of them.
Well, one of the things the National Association of Realtors pointed out was that the nationally, we're talking nationally now, the market movements of single-family and condominium sales, in contrast to the years past, are nearly equal. That's very unusual, and that implies possibly that the preference towards suburban living over city life that had been present over the past 2 years because of the pandemic is fading with a return to pre-pandemic conditions. People aren't afraid to live in closer confines. And
correct.
When you see, now, the other thing that I've seen over my career is that when you see a slowdown in the market, the first place you see it is in the condominium market. I don't know if your experience, Kim, is that your experience?
Yes.
Yeah,
for sure. Townhouses and condominiums are right behind the housing market.
Right.
Yeah.
Now, the total housing inventory in the United States, according to NAR, at the end of May was 1,160,000 units. That's an increase of 12%, almost 13% over April 2022. But it's still a 4% decline from May of 21. So we're still below the threshold, but month to month there's an increase, which basically is a consequence of the market changes.
Right, and maybe what that's saying is buyers are, maybe some of them are sitting on the fence a little bit, so it's allowing the short-term inventory to get a little bit higher because they're kind of waiting right now to see what's happening, maybe waiting to see sellers reduce their prices, a little bit bigger inventory, so they backed off a little bit, maybe not compared to a year ago, but they're just kind of being a little bit hesitant right now, which is allowing that short-term inventory to creep up a little bit.
Yeah, Kim, you've got some numbers in front of us in terms of what's going on right now in this area.
Yeah, overall on Hampton Roads, which we're including the South Side and Peninsula and Eastern North Carolina, the average absorption rate remains about 1.12 months. That's pretty good, and I think that goes all the way up to about the $900 to almost to $1 million home. Over $1 million, they're at 3 months. 2.5, 3 months. Which still, that's not bad when you're thinking about 3 or 4 years ago. The $1 million homes were a year. probably at least.
Now, explain to them, Kim, just real quick to the listeners, what the absorption rate is. What is that?
We do that every week.
Yes, please.
Okay, so the absorption rate is if we continued just this month, everything that we have on the market, that we could sell it within that 1.12 months. And that's based on the sales in the past months.
And that's assuming that no other properties are listed.
Correct.
So if we have 1,000 properties on the market right now within a price range, no other properties come on the market in that price range, in 1.12 months, we'd have a zero inventory in that price range.
Correct.
And on that note, we're going to take a break from the Money Talk 1310 AM, the Real Estate PB&J Hour, so advertisers out there can convince you to buy their products or their services. This is Paul Fuqua. We'll see you in a couple minutes back here on the Real Estate PB&J Hour.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rosenwomble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
Well, welcome back to the Real Estate PB&J Hour. This is Paul Fuqua again. You're listening to us at Money Talk 1310 AM, 100.9 FM, and MoneyTalk1310.com. Remember, if you want to go back and listen to us drone on, we're on YouTube. Look it up. The Real Estate PB&J Hour. We've got 23 shows. We'll have 23 shows as of today on there, and you can blip through them fairly quickly. You don't have to look at anything. You can listen to them, and then you can go on to the next one if you find it boring. If you have any questions, call us. 757-497-1310. That's the number here into the station. We'd love to have questions from you because we're talking about some very heady items that, quite honestly, sometimes just give me a headache. Now, if you have those questions, call us for either Kim or Bob or myself. And the most important element we were discussing before the break. What were we discussing, Bob? I can't.
Color your hair?
No. That was what were we?
The absorption rate.
Oh, the absorption rate. Yeah, that good old absorption.
Of the absorption
rate. Well, we do that every week, and it's, you sell all the houses you have on the market without any new listings, and it'll take you 1.1 months, and it's done. And then we're out of business, and we'll be all down there at Dumars taking orders from the cars.
And there will go be the PB&J Hour, and all be gone.
Yeah.
We got it. Yeah.
Remember, PB&J, fundamentals of real estate.
Right.
Hey, remember, I tried to run that thing, that poll, and it's another week. How many people like strawberry versus grape on their PB&J? Now, I had one guy who said lingonberry. Have you ever had lingonberries? They're a Swedish delicacy, I think.
They? Okay,
yeah,
okay.
And they're good. You have them with pork, and they're delicious. But I haven't had them with peanut butter. Yeah, lingonberries. Believe me, try it.
Okay, I'll take that away from
cranberry jelly.
Hour,
cranberry jelly. Peanut butter.
I used to make Nutella and peanut butter.
No. I thought Nutella was a replacement for.
Are we going down a rabbit hole here?
We're trying to climb our way out. Get up here, Kim, to this microphone because I'm dying. Okay, take over.
All right, I'm back. All right. Now, my name is Kim Pimento. I'm with Rosenwomble in the Greenbrier office. So the total contracts ratified thus far in June is 1,757. Actual sales closed so far in June is 2,070, which meaning we sold a few homes, probably back, I would say, April, May timeframe to be closing now in June. So the sales price to list price ratio remains the same, about 102%, and that's the average. And again, when we're telling you these stats, we're talking about the South Side, the Peninsula, and Eastern North Carolina. So that's a pretty large area to have this low of an inventory compared to previous years. Probably prior to about 2 or 3 years ago, about 3 years ago, we started seeing a decline. So on this,
well, I think a lot of that had to do with the fact that these interest rates have been low so long, and then the drum started to beat for interest rates going up. And so you started seeing buyers going, oh, we better if we're going to buy, Let's not wait till the interest rates go up. Let's grab what we've got now. And so what do you got? You got buyers jumping into the market to avoid the higher interest rates. Inventory comes down.
Yep, exactly.
That's going to be a good segue into one of the questions in terms of putting together a contract to purchase, an offer to purchase.
Yes.
And the first one is in today's market, is it an automatic at list? Or do we jeopardize our position as a buyer coming in as you did in the past? Well, we're going to be slightly under, or we'll be 5% under, or we'll be 2% under, or we'll be at list. But in the months past, it's been an automatic. Well, we're list plus, right? What do you think, Kim? And then Bob, you jump in.
I think we're seeing more sales probably at list price, and we're seeing some closing costs being paid. And that's hard to really kind of analyze that in the marketplace, because a lot of times we don't know if any closing costs were paid. It's just between the agents, and of course I see a lot of contracts that come through my desk, so I see that we're paying more closing costs, but the average person probably doesn't see that as much as we do as agents, that we are seeing that.
They don't see it, right? Yeah, they don't see it because there's no reporting mechanism to report if on all these closings, if closing costs are being paid by the seller, and if so, how much are being paid? Because during a year ago, there was a real sharp buyer's agents that were out there. I know because one of my listings down in Chesapeake, a very strong neighborhood and stuff, and probably had 20 plus showings in 2 days. I asked my sellers just to take off for 2 days and go find a hotel somewhere. 20 plus showings in 2 days, had at least 4 offers. One of them came in where the buyer agreed to pay the seller's closing costs.
That's 1%.
Yes, and stuff. Now, how often do you see that? Almost never.
Right.
But guess who is living in the house now?
That buyer.
That buyer's agent, and that buyer's agent was from Rosenwomble. Got to pat ourselves on the back. They learned and stuff, and they came in and they thought outside the box to get this house for their buyer. We're not seeing that quite as that's not happening.
How important is in the contract the description of the financing that is going to be placed on the property? Is it critical that we say, all right, it's going to be a conventional loan, or is it critical that you list the down payment? Is it critical that you identify the lender, or can you put lender of choice, of buyer's choice, because he's still shopping money? How critical is that?
What I'll tell you, one of the things that there's where you're trying. Remember, real estate. I equate real estate often to playing chess. Okay, the board setup is the market we're in. Okay, that's whether you're a buyer or seller, you come into the board setup, and it's the interest rates that are going on, the inventory that's out there, the location, all that kind of stuff. You're trying to figure out your opponent by what they see in writing. So the buyer sees the listing. The buyer's agent sees the listing. They're trying to get a picture of the seller by looking at what's in writing, the pictures. The seller, on the flip side, is going to get a read on 1, 2, 3, maybe 4 buyers that submit offers based on how that piece, 15 to 20 pieces of paper, how they are put together, how they're written up, and that's going to be how the seller and the seller's agent starts to narrow down the field to which offer they're going to negotiate, and the other ones are going to go by the side. So putting the contract together and what you write on page 1, there's where the meat is. There's your offering price. There's your earnest money, your good faith deposit, what kind of loan you're going to be using, all those kind of things. You don't have to look past page 1.
Right. And you should also say you want to be pre-qualified, meaning that you've already given your lender your documents, he's run your credit, he knows for sure that you have the funds, the reserves to come to the table.
A strong letter from your lender.
Correct, because you can get online with USAA or the Navy Fed and get a pre-approval overnight just by putting your own information. They'll print out that you're qualified to buy a $400,000 house. However, there's not been any really proof in the pudding, as we used to say, to prove that you really can get that $400,000 loan.
Mm-hmm. And that's when the underwriters, and remember we had an underwriter on the show several weeks ago who got very testy about the tests that underwriters apply to a loan package. And it used to be that you had a pre-qual letter which was generated over the phone or internet and with nothing more than stated income and your name and address and that you're alive and breathing, and then a pre-approval. Now, my recent experience has been that they don't the lenders don't term it a pre-approval any longer.
Correct.
It's now a qualification letter that has enough weasel language in it that they can still back out if you buy a new truck from the time you got the letter till the time you actually make full application.
And a good strong listing agent that's representing the seller, when they get the offers in, and you get an offer and it doesn't have a letter from a strong lender, and prefer, now, I might be stepping on some toes here, but preferred lender local that people recognize and go, okay, we know who these folks are.
Yep.
A good listing agent is going to pick the phone up and they're going to call the loan officer. And they're going to ask some really pointed questions about that buyer's skeletons in the closet, because that's what you want to know. What skeletons in the... Now, I understand they cannot,
know as well as I do, that some of them will not give you the kind of pertinent information you need in order to make.
So you kind of have to work your questions around to get a feel. But the good listing agent is going to pick that phone up and call
Bob,
to them.
You and I have been doing this long, and as all three of us, we've got a lot of years doing this.
Yeah, we won't tell anybody combined numbers. That'll get scary.
But these are things that we do as a matter of course that are important to provide the correct services to our clients.
Correct.
And it's not the stuff they teach in Real Estate 101, and that it's
Isn't that
learned by experience.
That's just unbelievable.
Well,
you got to have experience. Isn't that amazing?
I remember when I was in law school, and that was many, many years ago, and I hated it. But the one thing that was told is that when you graduate from law school, you are prepared to argue a case before the Supreme Court on a constitutional issue. Mm-hmm. But you couldn't go down the street and handle a normal breaking in and entering.
Yes.
Because you don't have trial experience.
Correct.
And there's a vast difference. And that's the same thing in our business. And I don't like to brag, but I will. I'm good at what I do. Bob's good at what he does. Kim is good. And we don't bring people on this program that don't know. I was going to use slang, but I won't. Don't know what they should know yet.
That haven't been through the ropes a few times and been pinned onto the ropes and gone, God, I can't believe I've got myself in this position and have to figure out how to get out of it.
Yep.
Okay, on behalf of your client, because you're there to represent your client and stuff. And then that goes into your lessons learned file. That was something that
my lessons learned file is huge.
I'll tell you what. Every time we came back from flying in the F-14, when we had our debrief, you debriefed the good and the other. We were too proud to call the other the bad, so it was the good and the other. And you always debriefed lessons learned, and you debriefed them to the entire group, the wardroom. You would stand up, and if you goofed up, you stood in front of the wardroom, and you shared your lesson learned.
With your peers.
Oh, my God, yeah, and that was embarrassing because it was usually you did something stupid. Well, experience plays a big part in Kim, from writing contracts and presenting them, because your goal is to get your buyer in that front door.
Well, that prompts another question, and that is, how important is the size of the earnest money deposit? And I've always believed as much money as you can afford to have sit in the attorney's escrow fund for as long as it's going to take to get this contract closed. That's what you put in there, because you want to show the seller that you have skin in the game.
Correct.
Then you don't want to, on a $500,000 house, you don't want to put $1,000.
Or $500.
Or $500.
Correct.
It's got to be something sizable. The largest one I had was on, I think it was a $700,000 house, and my clients put $150,000 earnest money deposit.
Now, take your buyer's agent hat off. put your listing agent hat on. You're sitting down at the kitchen table with your sellers, and you get 3 or 4 offers in, and one of them comes in and they have a strong letter from their lender.
Right.
The lender's cell phone number is in there, and when you pick the phone up, you can actually get them to answer the phone when you call them.
It's not like Rocket Mortgage.
Yeah, and stuff. Yeah, I mean, you can really get it doesn't matter if they're out for the week. They pick their phone up and you can talk to them. They come in with a well-written contract with all the blanks filled in, and they come in with a sizable earnest money. That's kind of what we call your good faith. That's telling the seller you really want their house. You get 5 offers in on the same house, and one's at $1,000, one's at $2,000, one's at $5,000, and one comes in at $15,000 or $20,000. As long as the other parts are there and stuff, that's going to have an impact on the seller, and to go, wow, sounds like these folks are really interested in our house.
They're interested enough to put the money on the table.
Correct.
Realize that earnest money deposits are credited to the buyer at closing for the purpose of
comes back at the closing table.
It's part of your down payment, or pays whatever expenses you have that you have to cover at closing.
Correct.
So earnest money deposit, you do not sacrifice it, even if you walk away.
Correct.
As long as there's no breach
of contract.
That's correct.
Correct. So what you're saying is, if for some reason you get to a point in the contract, first of all, your contract, your offer, it's an offer to begin with. It's not a contract,
right.
It's an offer. When everybody's agreed on the terms of the offer
in writing,
it becomes a contract. Okay, now you start going through the process of removing contingencies, home inspections, owners association, review of documents. And if there's any reason in this process that you terminate, as long as it's a contractual
opportunity to do so.
Yes, correct. That earnest money comes back to the buyer, and a good buyer's agent can explain that to their buyer and say, this is what it does, and this is how it's handled.
I have had a number, not an overwhelming number of times when I've had first-time home buyers whose parents have helped them buy the house.
Yes.
And we've had to write into the contracts contingencies that basically enumerated how many times the parents had to look at the house and give their approval. And in at least 3 or 4 of them, the parents had to fly in from points west or south or north in order to see the house and stamp their approval. Now, what way I wrote it for my buyers was always that it was within a certain number of days. They had to do it. And if you put a contingency in a contract as an agent, you have to have what happens if the terms of the contingency aren't met? Does it go
remember,
away?
And you have subject to contingencies, and you have contingent. It's contingent upon or subject to, and that wording is very different when it comes to contracts. Okay, subject to. You have to understand the differences and how to write the offer, because again, the seller, they don't know the buyer. Odds are they don't know who the buyer's agent is. They're trying to make their decision based on what they see in writing in front of them. And odds are also there's probably 2 or 3 other offers sitting in front of them that they're trying to make a decision on.
So, folks, don't write up a contract until we finish listening to this the discussion this evening with Bob Freck and Kim Pimento from Rose and Womble. We're going to take a short break so our advertisers can feed get their money's worth from their advertising. See you in a couple minutes. It's Paul Fuqua, and this is the Real Estate PB&J Hour.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
And we can bounce back and forth.
Okay. Welcome back to the Real Estate PB&J Hour. I'm Paul Fuqua. I'm here with Kim Pimento and Bob Freck, and we're discussing the elements of a successful contract. And I think between the three of us, there is a significant amount of experience and successful experience that's predicated on unsuccessful experience. The best way to learn how to succeed is to learn how to fail. So I'm going to turn this mic back to Kim and Bob, because they were on what constitutes a successful front page of the contract. And I think the issue we were discussing before the break was earnest money deposits and the strength of an earnest money deposit, but there are other elements. Kim, why don't you lead into that?
And one of the things we discussed during the break, which I thought was a really good point that you brought up, Kim, was the idea of a gift. That we're talking about, not a loan. Yeah, we're not talking about a pen wrapped up in a piece of paper. We're talking about money that you can get as a gift from relatives and stuff. Because we were talking earlier in the program about this big hunk of money that you need for reserves, down payment, closing costs, and for some buyers, they're going, well, where are we going to get that from? If you have the source that somebody can give you a gift, it can be done. It varies from lender to lender on their policies. It has to be real money. There has to be a gift. Talk about some of those things, Kim.
Yeah. Well, number one key is it has to be a gift. Because if it's not a gift and they find out that you'll be paying your parents or your cousin or your brother back, then there's an issue, because that will actually count against your debt ratio.
Becomes a loan.
Becomes a loan, even though it's just a personal loan between you and your family member. So we do know that some family members do hold their family members accountable when there's loans.
Or you got to give them a bedroom in the house. They got to have their own bedroom.
So it has to be a gift. And there's creative ways to do that, to avoid taxes and everything. You can do $15,000 one parent, $15,000 the other, but the best person to go to would be your loan officer, because they will kind of tell you how that has to be done. It has to be a letter. Sometimes it has to be in your account for so long. And if it comes from an account that your parents have, and I've seen this happen where the parents are a little bit reluctant to disclose that account that $30,000, $40,000 or up came from, because maybe you didn't know you had millionaire parents, that you do have to, that money does have to be tracked as well. It has to show where the parents got that money.
And when you flip that to the seller side, and often the seller doesn't know where this money is coming from. They don't know where it's coming from. A little history lesson here. Many, many years ago and stuff, I had a listing. The buyers came in and they were getting part of their loan package was gift funds. It was disclosed to us by the lender, so that was good to know that. The week of closing, everything came apart. I went back to the lender and said, what happened? And the lender said the buyers did not get the gift funds. I said, what do you mean they didn't get the gift funds? Well, the gift funds were coming from the parents who were going to sell a doll collection. Oh. You can't make these things up, okay? I mean, 30 years
the
in
doll
this
collection, Beanie Babies went way down.
They were going to sell a doll collection. The money they were going to get from the doll collection was going to be given to their child, one of the spouses, and that was going to be the source of their gift funds. Well, child and mama got in a tiff. Uh-oh. Somewhere prior to that, and mama said, no doll collection sale. Everything fell apart. So these gifts now, and this was back during the first boom when you could just about, if you could eat and chew gum, you could get a gift letter and it would count for you. Those rules have all changed, and now, like you were saying, Kim, it's got to be in writing, and I mean, everything's got to be
accounted
official.
For.
I got to jump in, because one of the questions I always have, this points out the advantages that a cash buyer has.
Oh my gosh!
Except that, how do you prove that you have the funds?
Right.
And quite honestly, I've seen 7-figure purchases where all that was provided to my seller was a stock holdings certificate provided by the broker.
With a lot of redactions in it.
A lot of redactions, but 10 times the amount of the purchase.
Yes.
Nothing else. No bank accounts, nothing. And my seller said, I said, I'll tell you what, let's go right now and let's see what the market's reading for these people.
Right.
And we took down the 5 biggest things, and we had certified that these were this individual's holdings, and she could have bought the house 30 times over because this was a 6-month-old.
And you can do that nowadays on the internet.
Yes.
I have sellers of mine come back to me and start telling me about the buyers whose offer they've accepted, and you go, okay, well, yeah, and you smile, you nod your head up and down, and all this kind of stuff. But they go back on the computer and they research the buyer. So buyers understand that you're out there. And again, coming back to the contract, that's what the seller sees. So putting together a good, strong offer is key.
Yeah, but let's go back to this sort of, proof of funds. Screenshots without the person's name or any type of account do not count. And I've had that been tried on me before. Everybody loves a screenshot these days. Mm-hmm. So it has to be something that, one, that the names match. The names have to match the buyers, and also that you have to have at least, you can mark out the last part of the account number, but at least the institution from which it comes from.
It's got to be some way to verify it. I mean, because you're going to your seller, and your seller's going, oh, a cash offer. Wow, this sounds good. And then a month down the road, you find out the cash doesn't really exist.
In this instance, this was a wealth management officer at a very, very well-known bank, and they provide us, here is a sampling of the holdings in this person's portfolio. I'm signing it as vice president, wealth management. Bam.
Well,
that proved everything.
The way it was put together, the way it was, let me tell you, because it was put together shoddily.
Right.
It wouldn't work, but you're right.
Okay.
Well, we recently had a contract in our office that the people were paying cash for a house in Chesapeake, and they supplied a letter from the bank. We verified it. It was the bank. We called. That guy actually worked there. When we finally got a hold of him, found out it was bogus.
Mm-hmm. Yes.
So you have to be very careful
nowadays,
today.
even more so, because they can come up with bogus documents that look official.
I had one, I'll never forget it. It was a very expensive home, and a man came in with his family, and it was a huge family, and they went through the house, and then they came back, and they went through the house again, and they provided a contract, and it was acceptable to my sellers, and I said, well, and it was a cash deal. Mm-hmm. And I said, well, I have to have proof of funds, and the buyer's agent said, okay, well, we'll get something. And I said, what do they have? He said, we'll provide you a letter. Well, the letter came from a bishop of a church in Utah. And he said, yeah, so-and-so, these funds are going to be there for him to close. And I said, but it didn't say anything more.
They're not skimming money out of the collection plate, right?
No. And so I called the bishop up, and I said, this doesn't sound right. He says, God will provide. I said, well, does God have a bank account that we can get?
Can I see his bank account number?
And they couldn't give it.
Right.
And, my sellers became a little bit upset because they were anticipating a nice sale. Fortunately, we sold it to another couple within 3 days.
But the key there is...
I made the call.
You picked the phone up. You saw the documentation come through as the listing agent. You picked the phone up and you...
God would provide. That's what that bishop... God will provide for this family. They are wonderful people. Yes. God will provide. I said, well, how's he provide? He will provide. Nothing more.
So do your homework and put together a strong package.
Now, how important is it to put the money, your earnest money deposit, in the hands of an independent third party? I always do the attorney who's going to be acting as settlement agent. Is there any consensus of opinion?
The law says that whether it
has to be in an earnest money fund.
Has to be an escrow account.
No commingling.
Right.
Is governed, strictly regulated. That's
all the companies, whether you're an attorney, whether you're Rose and Womble, whether you're XYZ Realty, we're all bound by the same laws that tell you how you have to handle a client's earnest money. That is, if you want to lose a license really fast, you don't handle your client's earnest money properly, and that'll get you a short trip to the back door.
When do they have to deposit? When does that check have to be deposited? Somebody is putting $5,000 earnest money. When does it have to go in the bank?
You have to have it deposited within 3 business days. Business days.
Right. So no holding on to it. It's really well guarded and stuff. It's
in the state of Virginia, the contracts that we use state that they have to have it within 2 days. Two days of ratification has to be in the hands of the broker, and then the broker has to have it deposited.
Yes, and it's best not to write a rubber check for that.
Yes, that's not. But now you can wire it, which is nice. There are several ways to be delivered. It used to have to be a check, certified or personal, but now we have wiring capabilities. But who's holding the earnest money deposit is an interesting thing, because I've seen some agents get really big. Well, we're going to hold the earnest money deposit. But it has to be agreed upon between both parties. So you have to choose what is your advantage. What is your advantage? Don't pick and choose your battles.
Yes.
Since it has to be agreed upon to release that earnest money deposit, if it's to your advantage, whoever's needing or wanting it the most, probably you can let that go, because it has to be agreed upon by both parties, signed.
And again, that's on page 1 of the offer on who's holding the earnest money. And if you have a seller that most of them don't understand this earnest money and where it goes and who holds on to it. So if you're a buyer's agent and you want to have an extra little feather in your cap, let the listing agent's company, even though it's a little bit more legwork, let the listing agent's company hold the earnest money, because then the seller's looked at and they're working with XYZ Realty, and XYZ Realty is holding and it helps them feel more comfortable.
I'm going to disagree with you.
Okay, you can do that. It's your show.
I know. Well, if I'm representing a buyer,
yes,
it suggests very strongly that the buyer let his choice of settlement attorney handle the earnest money deposit.
And that's a good point, having the attorney hold it, yes, because then it's a third party.
It's a third party.
Yes.
It's not a real estate company that's holding it. There are no questions on the part of any people, because it's an attorney, and that attorney will be functioning as a settlement agent for the buyer, which is under Virginia law.
Correct.
Now it's etched. It's not quite etched in stone, but it is.
So on page 1 of the offer, you would have the attorney's firm listed as who's holding it.
Or if he hasn't made a decision yet, and I don't make those decisions for my clients, I always write the settlement attorney of buyer's choice. But it's attorney, not Rosenwomble, not Howard Hanna, not anybody else. I prefer that it be in the hands of the lawyers, because if there is any kind of termination, then that lawyer already has the documents in front of him, and it may be simpler and faster for that money to be refunded out of that attorney's.
Correct. So that's a good option. That's a reasonable option, is to have the settlement, and you'll hear it referred to in our business as the settlement agent.
Right.
Typically, that's the buyer's title company in the state of Virginia. It can be a title company or it can be an attorney.
Right.
And you'll hear it referred to as settlement agent, and having that entity hold the earnest money, and that's a real reasonable option.
All right, I'm going to ask both of you: do you think it's of any value to put a retraction language into an offer, meaning if the favor of your response by such and such is requested, and in lieu of that, the offer is automatically withdrawn? I mean, that was old days, that was old school, but I think in some instances, when agents are doing their job for the listing agent, they're shopping for more offers. Correct. So we don't want my offer for my clients being held until 2 or 3 people. So we want an answer.
One of my inputs on that is, if you come in with a really, really strong offer, okay, and I mean you've dotted your I's, crossed your T's, you've got a large earnest money deposit, I mean large, not, and stuff, and you've come in at or in this market above list price, you've come in with an appraisal guarantee. If it doesn't appraise, we'll talk about that in a different program, but if it doesn't appraise I'm setting up your schedule. Yeah. If you could take notes here, Paul.
Yes, next week, Byron seller outs.
But you come in with an offer that's really, really a top-notch offer and stuff, then you might consider that, because legally a listing agent can shop the offers that come through the front door because they're bound by fiduciary obligation to get the highest and best price on the best terms for their seller.
Well, but the truth about that is that even if that that seller accepts your great offer, they're still obligated to present that offer if they get more that come in.
Yes, correct. So
unless instructed.
So to answer your
No
question,
more offers by the seller.
Yeah. Okay. So to answer your question, if it works with the offer,
Yep.
and stuff, if you're not just coming in with something and they go, whatever,
I've had people that have put in offers that were lowball and they wanted an immediate response, and look, we're not going to do that.
Correct.
Let's put it so that they have to respond to us because they don't want to lose it.
Right. That's exactly right. And I remember years ago you saying, what was the thing talking about the fear of loss?
Yes.
Remember that seller fearing losing that amazing offer because they don't respond in a timely manner.
Okay. Now we're down to 2 minutes before I want Bob, give us your self promo real quickly. Kim, your self promo, and then we're going to call it a wrap until next week.
My self promo is my wife's book that's coming out on the 16th of July.
Hurry up, we're going to run out of space.
And Words from Walls, and it's going to be at the Muse Writers Center on Colonial in Norfolk. The book signing and all that kind of stuff is going to be the 16th of July. So be there. I'm going to be there.
Okay. Kim?
Yeah, well, my promo is I'm Kim Pimento, the managing broker of the Greenbrier office, and I have wonderful agents that I work with, including these two gentlemen. But if you'd like to work with one of our wonderful agents, please give us a call. And I would love, if you're an agent out there and looking for a place to go, I'm here.
Well, we hope you've enjoyed this broadcast, and if you want to re-listen to it, go to YouTube. It'll be on the within 24 hours at the Real Estate PB&J Hour on YouTube. Subscribe, doesn't cost you anything. That way, you've got I've got counts on everybody. Remember the poll. What kind of jelly do you like on your PB&J? And this is Paul Fuqua with Rose and Womble. I'm signing off of show number 23. Of the Real Estate PB&J Hour. It's appropriate. It's on the 23rd of June. Thank you very much for listening. Look forward to next week.